Types of major accounts. Assets. Defined as anything that has economic value, whether tangible or intangible items, that the company owns. Examples of tangible assets are business bank account, inventory, land, building, vehicles, and equipment. Business accounts receivables, trademark, logo, copyrights, prepaid expenses, and other non-physical items, are considered intangible assets. Assets are grouped according to either their lifespan or liquidity, the period at which they can be converted into cash. Current assets are those items that are completely consumed, sold, or converted into cash within 1 year or less. Examples of current assets include cash, inventories, accounts receivable, and prepaid expenses. Fixed assets or non-current assets are tangible assets with a lifespan of at least 1 year and beyond. Fixed assets include company vehicle, machinery, equipment, furniture, and buildings, and others. They are generally not liquid. And because of their higher costs, assets are not expensed, but depreciated, or written off over a number of years according to one of several depreciation schedules. Please note that tangible assets are physical assets such as cash, supplies, and furniture and fixtures, whereas intangible assets are non-physical assets such as patents and trademarks. 2. Liabilities. These are business obligations or debts that the entity owes to others arise from past transactions or events. These can be accounts payables, salaries, and wages payable, mortgages, interest payable. Liabilities can be viewed in two ways. A. As claimed by creditors against the business assets, and B. A source, along with stockholders' equity and business assets. Liabilities are classified as current or non-current/long-term. Current liabilities are business obligations that are paid within a year or less, and primarily consist of monthly operating debts. Examples are accounts payable and unearned income. Current liabilities are usually paid with current assets like the cash in the business bank account. A company's working capital is the difference between its current assets and current liabilities. Managing short-term debt and having sufficient working capital is vital to a company's long-term success. Fixed liabilities or non-current/long-term liabilities are typically mortgages or loans used to purchase or maintain fixed assets, and are paid more than 1 year instead of months like mortgage payable, loans payable, and others. 3. Owner's equity or stockholders' equity defines how much your business is currently worth, or that portion of the total assets of the company that the owner fully owns. Equity is the difference between your assets and liabilities. Common stock, dividends, and retained earnings are all examples of equity. Equity is also referred to as net worth. Capital refers to the financial resources that businesses invested in order to operate, like cash, machinery, equipment, and other resources. These are the assets that allow the business to manufacture goods or services to sell to customers. Drawing is an account maintained to track money withdrawn from a business by its owners. 3. Revenue and income. Revenue is the money earned from selling goods and services related to the company's primary operations. Revenue is often referred to as the top line, because it sits at the top of the income statement. The top line refers to a company's revenues or gross sales. The revenue is the income a company generates before any expenses are deducted. Therefore, when a company has top-line growth, the company is experiencing an increase in gross sales or revenue. When owners or investors speak of a company's income, they're referring to net income or the profit of the business. Net income/net profit is the amount remaining after expenses are subtracted from revenue. It is referred to as the bottom line of the business. Please note that income equals revenue minus expenses. Example. Consider an umbrella manufacturing business. In 2019, the company sells 50,000 pieces umbrellas to its customers at 65 pesos per piece. So the total revenue for the business is 3,250,000 pesos. In the course of doing business, the company incurs various expenses such as raw materials for umbrellas, purchase and maintenance of machinery, labor cost and other operational expenses amounting to 3 million pesos. So the income or net profit for the company in 2019 is 250,000 pesos. 5. Expenses. Costs of the business spent during operations to generate income, or produce goods or services, is considered an expense. This may include office supplies, advertising costs, utilities, salaries, rent, and others.